Welcome to this webinar this afternoon. Thank you for joining us. My name is Kristin Re, and I will serve as your host today for this webinar. Welcome to all of the clients and friends of Lumsden McCormick that are on, as well as members of the Buffalo Niagara Manufacturing Alliance. Before we get into our introduction of Kristin, who's your speaker today, I'm going to run through several housekeeping items. This webinar will be recorded, and once it's available, it will be posted onto Lumsden McCormick's website, and the slide deck will also be provided there as well. Both the chat and Q&A are enabled. Please make sure to add your questions for Kristin to the Q&A box. We will address those all at the end. Additionally, if you have a question you'd like to ask Kristin that you don't want to put into that Q&A, her email will be available in the chat if you'd like to contact her after the fact. We are offering 1 hour of CPE credit for today's webinar. So all polling questions that pop up on your screen throughout must be answered for you to get that CPE credit. There will be 4 polling questions at various times throughout the presentation. CPE certificates will be emailed from noreply@lcvista.com within 30 days of today's presentation. You will see that subject line will say Lumsden McCormick CPE certificate. At the end of the webinar, please complete the survey, which will automatically launch. This will serve as the webinar evaluation and is also required for CPE credit. In addition, the email that you receive from LC Vista with the CPE certificate will contain a webinar evaluation. This evaluation is optional, but we always appreciate your feedback. Any questions related to any of these housekeeping items, please drop them in the chat for me. But otherwise, we are going to get started with our presentation from Kristin today. Kristin is a principal in our tax department serving businesses and individuals. She works primarily with commercial entities in a variety of industries, including partnerships, S corporations, and C corporations. She has worked extensively with manufacturers and startup companies. Kristin helps companies obtain various tax incentives to reduce tax liability and improve cash flow. Her focus is on various federal, state, and local business development incentives, including Startup New York, Excelsior Jobs Program, New York State Film Tax Credits, and federal research and development tax credits. She is involved with firm recruitment and hiring and is a member of the Lumsden McCormick manufacturing team and serves as co-chair of the firm's R&D tax credit department. Okay, I will pass it over to Kristin now.
Thanks, Christine, and thanks everyone for joining us. It's a beautiful Thursday out here, so I hope that everyone's able to get some sunshine this afternoon. Also, it is April 24th, so thank you so much for joining us on April 24th. This is the period when us CPAs tend to reemerge into society now that we've made it through that busy season. So thank you so much. And also, I just want to make sure I give a shout out to the Buffalo Niagara Manufacturing Alliance and Peter. Thank you for the opportunity to speak. As always, Peter knows that this is something that is very near and dear to my heart, and I always look forward to the opportunity to speak on it. So with that being said, we'll go ahead and get started. As Christine mentioned, please feel free to send questions through the chat as we go. I also do have my contact information here. Actually, I'm going to switch to the next slide. My contact information is here. There's also my contact information on the last slide here. If you don't want to send an email, or I'm sorry, if you don't want to send a message through the chat, please feel free to email me and reach out. We can set up a call to kind of discuss your questions further. But with that being said, so this is just a brief overview. You know, there's a lot of things that we're going to cover on this webinar, specifically related to both federal R&D tax credits, and also if there's any state R&D incentives as well. And as many of you may or may not know, there are also some recent changes to these federal R&D tax credit claims that we'll cover as well, and kind of discuss how you can better prepare for these changes so that you can have successful research credit claims. So you may or may not be aware of what the R&D tax credit is, but from a high level, it is a general business credit, which means it is a federal income tax credit that you claim on your federal income tax return. If it's being claimed as a federal credit, it is a dollar-for-dollar reduction in a tax liability. So if I have a $10,000 tax liability, and let's say I've got a $9,000 credit, that credit can help offset that $10,000 tax liability. In addition, the R&D tax credit can also be beneficial through a refundable payroll tax credit. So what that means is you can claim, if you meet the IRS's definition of a qualified startup business, which I will emphasize that our definition of a startup business is definitely different from what the IRS had. There is set guidelines that we'll kind of get into in terms of who's able to elect this credit. But there is an opportunity for certain small businesses to actually claim this credit through a refundable payroll credit. So it's offsetting the employer portion of FICA taxes on your quarterly 941s. That can especially be beneficial if maybe you're a smaller company that is looking to claim an R&D credit, but maybe you're in those first few years of operations where you're operating with losses and you don't necessarily have that income tax liability to benefit immediately from that R&D credit. So this can kind of be an option where you can get that credit refunded to you through this payroll credit. So that is a little bit on what we're talking about and kind of why we're talking about it. Something that I find, especially I'm going to focus primarily on manufacturers, since I know this is in conjunction with the BNMA. A lot of the times companies are already conducting the activities that qualify them for these credits. With that being said, we want to make sure that our clients are getting the benefit of this credit since you're already doing the activities. That's kind of where we come in to kind of help you identify what those activities are, identify what those qualified costs are, and then also help you develop those tracking mechanisms so that we can make sure that your company is, benefiting from these credits. Because, we just talked about this can be an income tax credit to offset income tax if you're in a taxable position, can also be a refundable credit if we meet those qualifications for a refundable payroll credit. So, this credit can help increase your runway because it's putting extra cash back in your pocket, whether you're getting that refund of FICA taxes or it's offsetting some of the income tax that you would have to pay in to the IRS or to the taxing authority. So what's the benefit of this credit? Generally speaking, this credit's going to come out to be between 6 and 9% of qualified research expenses. And we'll go into further what that qualified research expense means. So with that being said, there's a nuanced calculation, but generally speaking, we're looking at what are our qualified research expenses, and then we're falling somewhere between 6 and 9% of that. If you are claiming this as a federal income tax credit, and let's say you don't have a tax liability in that current year, the credit can carry back 1 year and it can also carry forward for 20 years. So a lot of the times what I recommend looking at, assuming that we don't have cash constraints or anything like that, is if we have a heavy R&D year, it may make sense to harness those expenses and capture that credit in that year and then carry that forward to future years when we know we're going to have that tax liability, assuming that it makes sense to do so. As I mentioned, eligible taxpayers can offset the employer portion of FICA taxes. That's if you meet that IRS definition of a startup company, which we'll get into later. Also, just kind of give you a better idea of how the mechanics of this actually works. As you may know, you've got a difference between a C corporation or an S corporation. Most times manufacturers are either going to be a C corporation or an S corporation, or you may be that partnership. So as a C corporation pays tax at the entity level. So the C corp itself would claim that income tax credit, assuming that we're not electing that payroll credit. For an S corp or a partnership, as you may know, your income and losses, that's all flowing through to the individual owners or the ultimate owners of that entity. And that's where that tax is being paid. So if you had a flow through entity such as an S corp or a partnership, that credit's going to flow through to, let's say, your personal return if you are an individual that owns the S corporation. I always like to throw this slide in here when we're talking about R&D tax credits because I feel like a lot of companies maybe have some misconceptions regarding what is actually eligible for a credit and what isn't eligible for a credit. I think especially when you're in that manufacturing sense, you may think, oh, hey, I'm not messing around with chemicals. I don't have scientists in lab coats in my, facility or anything like that. And really the R&D credit captures so much more than what, the textbook definition of, scientific research and development might be. So, white lab coats and test tubes, they're not required. It doesn't have to be something that's brand new, state of the art to the world. It just has to be something that's new to you. So, a lot of the times I run into clients or companies out there that are like, hey, well, I'm not doing anything that's totally state of the art here. And that's okay. As long as it's new to you and you have this technical uncertainty, which we'll get into, those are still qualified activities that we should be looking at. Also, hate to say it, but sometimes failure is even better. The project does not necessarily have to move forward for it to qualify. You could be in phase 1 of development and determine, this just isn't feasible, and that's okay. And quite frankly, like I said, sometimes having that failure is even better because it really does prove that you didn't know what we were doing and that we did have that technical uncertainty. And like I mentioned too, you don't have to necessarily have this huge income tax liability in order to benefit from this credit. If you meet some of the required definitions for qualified startup company, this can help offset the employer portion of FICA taxes. So we can be utilizing this in other means other than just as a federal income tax credit. All right, so we kind of started with a very high level overview of, what is this credit? Why are we talking about it? What are the potential benefits? And I think the next step is looking at, okay, well, what actually qualifies for that federal R&D credit? And what activities should we be looking at? The first spot that I usually start with when I'm looking at and having these conversations with clients is the 4-part test. As the name entails, there are 4 parts. And basically, this is a test that the IRS has put into place to help companies determine if they have qualified activities for purposes of this federal R&D tax credit. So that first test there, it's technological in nature. So basically what this is getting at is we want to make sure that we're looking at, do the activities rely on the hard sciences? And that's going to, consist of chemistry, biology. In today's day and age, computer science is considered to be a hard science, physics, engineering, anything that, like I said, focuses on that hard science aspect. So things that would not qualify would be if we're doing, market research, humanities, things like that. That's more of the soft science side of things as opposed to true engineering, biology, physics, etc. The second test that we have there, permitted purpose. So there has to be a reason that we're conducting this activity in the first place, whether we're trying to create a brand new product for our company, or maybe I have an existing product, but I'm trying to make it better. Maybe I'm trying to make its shelf life longer, or I'm trying to make it in a more efficient manner using different types of materials. Or something that is often overlooked is maybe I have a process improvement. So maybe I am reconfiguring my manufacturing line, or I'm, bringing in new pieces of machinery and equipment, and I'm trying to figure out how does this manufacturing line work now? Those are items that we could look at in terms of permitted purpose. So there's a reason that we're conducting that activity. We're either creating a new product, improving an existing product, or improving a process that we have in place. The third test there that we have is technical uncertainty. So I am going to emphasize too, these last 2 tests really tend to be scrutinized a little bit more by the IRS. I'm not sure if anyone likes to read about R&D court cases in their free time, nice light reading material right before bed. But these 2 tests tend to be what most of the recent R&D cases that we're seeing are focusing on. And the reason that is because these are the 2 harder tests to prove. It's a little bit more difficult for a taxpayer to prove this technical uncertainty in this process of experimentation. So technical uncertainty, what this test means is if I know how to do something, it's not going to be R&D. There has to be some form of technical uncertainty regarding how I get to those intended results in order for it to qualify. So that could be, what's the proper design? What's the proper material? What's the proper process? How do I get to what I need to get to? There's got to be that form of technical uncertainty where I don't know how to get there, and I'm going to have to test it. I'm going to have to, try to eliminate variables to try to get to the intended result. And that fourth test that we have there, process of experimentation. So if you think back to scientific hypothesis, what's my question? What's my hypothesis? How am I testing that hypothesis? And then how am I analyzing those end results to determine if I'm reaching what my intended goal was? And then if I'm not getting to what I wanted, how am I going back? How am I swapping out my variables? How am I going back and retesting? So that's really what we want to prove, is that there is a process of experimentation being taken to eliminate that technical uncertainty that we just talked about. So like I said, that's what we call the 4-part test. So generally speaking, this is what I like to start with. When you're looking at your activities, do they meet this 4-part test? Could we justify that we, have the technical uncertainty, we have a process of experimentation? Is it related to the hard sciences? And what's our permitted purpose with this activity? So that's usually a great starting point for clients. And if anyone wants to reach out to me afterwards, I do have a nice handout that I can send out to you that kind of illustrates that 4-part test that you can use as your starting point for determining, okay, do I have activities that qualify? Or if I have a bunch of R&D activities, which ones qualify for this credit? In addition to that 4-part test that we just talked about, there are other additional R&D eligibility requirements. So, this is a federal income tax credit. Its goal is to promote R&D and innovation in the US. With that being said, the work and the R&D activities should be performed in the US in order to qualify. So something that's super common, let's say I've got, independent contractors, I'm just going to pick on like India. That's not something that would qualify. I wouldn't be able to take their costs into account for this credit. However, if I have individuals here in the US physically overseeing the work that the Indian contractors are conducting, that could qualify as long as they're located here in the US. So we're focused on activities performed in the US for this. Something else that I always mention to clients as well, funded research does not qualify. What that means is, this can encompass a variety of different agreements and arrangements, but the most straightforward one to think about is, let's say I have a government contract. I'm going to, conduct some R&D and develop a product on behalf of the government. That is something that will most likely fall into that funded research. However, like I said, this can take many different forms, and we always want to make sure that we're being cognizant of those contracts that we're developing and, signing with other third parties. So I highly recommend, if you're in the process of compiling some of these agreements, that you reach out to us, and we can always, kind of take a look to determine if this is going to fall under funded research for R&D or if it's not going to be funded research for R&D. And, I kind of just mentioned these last 3 items already, but that level of technological advancement does not matter. You could have an existing product and you're just looking to swap out from one material to another. And as long as we meet this 4-part test, we meet the other various nuances for eligibility, that's okay. It doesn't have to be this state-of-the-art development in order to qualify for this R&D tax credit. And we mentioned, success is not mandatory and failure does qualify. And sometimes it's even better because it just helps our case in supporting to the IRS, hey, we truly didn't know what we're doing here. We truly had this technological uncertainty. So this does qualify for the credit. The other thing that I do just want to mention too is, in order for the research to be qualified for the credit, you as the taxpayer do need to retain the IP or the intellectual property to that research. So that's often something that, once again, kind of falls under this funded research issue as well, depending on what that arrangement is and what those agreements are. So just something to be cognizant of as we're developing these agreements. Let's see here. Oops, sorry, this did not move forward. There we go. So non-qualified activities. As we talked about, anything conducted outside of the US is not going to qualify. We need to make sure that the R&D activities are here in the US. Research conducted after initiating commercial production. Generally speaking, and I'm putting a generally speaking on there because there's always facts and circumstances that need to be considered. Generally speaking, once you have a product that's ready for commercial production, that generally means you have eliminated that technical uncertainty. Once we have eliminated that technical uncertainty, that tends to draw the line in the sand of, okay, we no longer have R&D because we no longer have technical uncertainty. So that's just something to keep in mind as you're looking, okay, when did my R&D commence, but when did it end as well? There are special circumstances for if you have a product and you are looking to adapt that to a particular customer's specifications. So maybe you have an existing product, but you have to tweak it slightly, you know, that's kind of where it gets a little gray. We're going to have to look at the facts and circumstances to determine if that is truly eligible. And like I said, the IRS does have some specific guidance that carves out if you truly are just adapting something to a customer's needs that may not fall under that technical uncertainty. So once again, something that we would want to look at and have a further discussion on. And as I mentioned, you know, surveys, humanities, social sciences, arts, those are not considered to be the hard sciences. So research surrounding those are not going to be eligible for this credit. And I think we have our first polling question, Christine.
Yes, we do. I see a lot of you are already answering it very quickly. Just why are you attending this webinar? And I will keep it open here. I can see as your responses are coming in, so we'll leave it open for just a minute so that everyone has a chance to answer.
Mhm.
Okay, we have one person, so I'll give you a couple seconds to answer. Okay, and I'm going to close out that poll there, and it seems that most of you are attending for that credit and to learn about tax credits. We like that. Okay, and moving on. Go ahead, Kristen.
Thing you so much. All right, let me rearrange here and make sure I can get to the next slide. All right. So one other thing that I want to mention, and we're going to get into, you know, okay, we have a good idea of what qualifies as R&D activities, what costs should we be looking at. So we'll get into that next. But the one last thing that I wanted to mention, as I know this is geared more towards manufacturers, but this is something that I see in the manufacturing world as well, is software development. So software development can qualify for the R&D tax credit. Generally speaking, software development is going to get bifurcated into two different categories. So there's going to be something called internal use software and non-internal use software. Non-internal use software makes life a little bit easier. Those activities are subject to the rules that we just talked about in terms of the 4-part test, funded research, making sure that you're retaining the IP and all of that. Internal use software has additional tests that it must meet in addition to everything that we just talked about. So there's 3 additional tests. So the software must be innovative, the development must involve significant economic risk, and the software cannot be commercially available. So that last one's a little bit easier to, you know, kind of understand and justify. However, the first 2, software is innovative and development involves significant economic risk, are not clearly defined. So there's a lot of gray there. There have been, you know, court cases that we usually look at to determine, okay, does this meet the significant economic risk requirement? Is this innovative enough? But as I mentioned, it's a little bit more gray, so there's going to be more risk there. So generally speaking, if we can pull things into non-internal use software, you know, that's our goal. Generally speaking, when you have something that's interacting with an external third party, that can generally get grouped in with non-internal use software. However, that's not to say if you're, you know, developing a totally internal inventory system that isn't going to be eligible. You know, that's something where we do want to make sure we have those conversations to determine if that software that you developed is eligible or not. And then kind of similar to, you know, what we were talking about earlier with that 4-part test, is the research does have to rely on the hard sciences. Design related to aesthetics does not qualify. And this applies to, if you're manufacturing a product as well. I always like to think of like a brewery. I think that's a little bit easier for me personally to kind of put this into perspective. But let's say I'm a brewery and I'm developing a new beer, and my only the only thing I'm changing and the only thing I'm really looking at is the taste. The taste really doesn't come down to the hard sciences. Where the hard sciences are okay, are my CO2 levels where they should be? Is, this meeting all of the requirements that it has to with the FDA? Things like that. So we're really looking at those hard sciences. So when we're looking at software development as well, if I'm just looking at, well, if I make something this color, does that bring enough customers to it? Or will customers react better to it if it's this color? That's where we're kind of losing more of that hard science aspect and that computer science aspect to it. So once again, something that, we want to have those conversations on, just to also make sure that we're not leaving anything on the table that could be eligible. All right, so we talked about, what is the federal R&D credit? What are the benefits? What activities potentially qualify? The next step here is, what expenses are eligible for this credit? So this is just a nice little visual that I like to show, because really from an R&D tax credit standpoint, we're really coming down to 3 categories of expenses: wages, contract research, supplies, and computer leasing. We kind of usually group supplies and computer leasing together in this visual. And as you can see, the R&D tax credit is a wage-driven credit. And what that means is a majority of the credit's going to come from the wages that you're paying your qualified employees that are conducting these R&D credit or R&D activities. So that you can kind of see in this visual here that, wages really do make up a majority of the pie. And then that's complemented by the contract research and the eligible supplies. I do want to point out that that's not always the case. Once again, facts and circumstances. Every company is different. Everything operates different. Your R&D activities are all different. I've had manufacturers where my supplies significantly outweighed my wages, and that was significantly higher. That's not to say that is incorrect and that it can't be that way. It does tend to be a little bit more scrutinized by the IRS because the IRS expects wages to be a little bit higher. But once again, looking at those facts and circumstances and making sure, we're claiming what is eligible for that credit. So just diving into these different categories a little bit further here. As I mentioned, the first category is qualified wages. So those are going to be the taxable wages that you are paying your employees that are conducting these qualified R&D activities. Generally speaking, that's going to mean box 1 W-2 wages, because that's where we're reporting taxable federal wages. And from there, what we're looking at is how much time are employees spending on these qualified activities. Once we have their wage amount, their taxable wages for the year, we multiply that by the percentage of their time that they're spending on R&D activities, and excluding this percentage of time that they are not conducting qualified R&D activities. Something that I like to point out, because I think that this is oftentimes overlooked, is that, it's not necessarily just your engineers that are directly designing a new product, let's say. Obviously that's going to potentially qualify for this R&D credit. But in addition to that, there are other levels of support and supervision that we also want to make sure that we're taking into account. And like I said, this is oftentimes missed, and we're losing those additional wages in this credit calculation. So something to keep in mind too is, we've got 3 buckets of qualified time for R&D purposes. That first bucket is going to be, direct R&D activities or direct R&D, engineering. Someone's developing a product, or maybe you have someone that's, actually designing the line or the new manufacturing line and things like that. In addition to that, you also have direct supervision that could qualify for the R&D credit. So that's going to be, the individual directly overseeing the direct R&D activity of, someone conducting that first activity that I had mentioned, which we call bucket 1, and supervision we call bucket 2 in the R&D world. So an example of that is, let's say, I am an engineer. I am, designing a new product, but I have a supervisor who's overseeing my work on this R&D project. That supervisor's time can also qualify for this credit. In addition, let's say, I'm trying to run a prototype through my manufacturing line, and I need individuals that are able to run the line for me so that we can create this prototype. Those individuals do not necessarily have the direct, knowledge to design a new prototype themselves, but they are supporting that R&D process by running the prototype through that manufacturing line. So those individuals can qualify as direct support time of R&D as well, and we can take a percentage of their wages into account when looking at this credit. So like I said, I really like to point that out because it does go beyond just your core engineers, and it really does encompass the full R&D process. In addition to wages, as I mentioned, we also can take into account supplies that are used and consumed in the R&D process. The most straightforward way to think about this is, if I'm developing a prototype and I'm, purchasing raw materials to create that prototype. Those are supplies that are used and consumed in the R&D process. That's something that we can look at for this credit. Something I do like to point out, because this comes up all the time, is if you purchase machinery and equipment or something that you're using in the R&D process, that is not eligible as supplies for R&D purposes. The reason that is that we cannot take anything that is able to be capitalized as an R&D supplies expense. Therefore, if you're purchasing new equipment and things like that, we can't take that in the federal R&D credit, but there is actually a New York State incentive that I have later on in the presentation that we can consider that for. So we'll table that discussion for the time being. In addition, there's also contract research. So let's say I am manufacturing a new prototype, but I don't have the capability in-house to test that prototype, and I need to consult and contract with a third party for them to conduct the testing of it. That is something that could qualify for contract research. Now, contract research does have its own set of tests and rules in order to determine if that contract research is eligible. This is the wonderful world of R&D that I live in, where there's just, nonstop tests and contingencies and requirements. But generally speaking, that contract research, assuming it meets all of those tests, it can be taken into account for that credit. I do want to point out that contract research does get a 35% haircut. So generally speaking, we can only take about 65% of contract research into account for the credit. It can go up to 75% or 100% depending on the type of research, but in most cases, we're looking at 65%. So not as beneficial as having those capabilities in-house or having employees in-house that are directly conducting those R&D activities. The last category that we have here is rental or lease of computers used in qualified research. This could constitute AWS and things of that nature. Not something that you see all the time in the manufacturing world, but I have seen it. So I just wanted to make sure that I pointed that out as well. So that's a little bit of information regarding qualified research expenses. We'll kind of get into we went through benefits of the R&D credit, what activities qualify, what expenses qualify. We're going to get into documentation and what an R&D study actually looks like as well. But before we get into that, I do just want to mention some changes that occurred to R&D under the Tax Cuts and Jobs Act. So one of the things that happened, and you may or may not be aware of this, is starting in 2022, businesses were no longer able to expense R&D costs as they're incurred. So prior to 2022, if you had, employees doing these R&D activities and were spending money on supplies expense going into these R&D activities, you could immediately take an expense for that in the year incurred. So if I spent $1 million on R&D in 2021, I could expense that $1 million. Starting in 2022, that $1 million of R&D expense now is required to be capitalized. So that means I'm taking it from my profit and loss or my income statement, and I'm putting it on my balance sheet. And from there, I have to amortize it over 5 years if the research is in the US, or 15 years if that research is conducted outside of the US. So ultimately, I am still getting that expense. However, it does hurt a little bit because instead of getting that $1 million in the year I incurred it, I'm getting that $1 million over essentially 5 or 15 years. It's a little nuanced because you get like a half year in the first year. So that's something that, we definitely want to make sure that we're aware of. Something that I point out is that, a federal R&D tax credit is going to be a permanent tax savings. You are going to get it, if you're eligible and you claim the tax credit, you're going to get a credit that's going to offset income tax that will permanently result in a savings for you. Whereas when we are looking at this R&D amortization, it's all timing, which means I'm going to get the expense regardless. It's just a matter of, do I get it now or do I get it over 5 or 15 years? So I never want a client to look at the amortization requirements and say, well, you know what, I don't think I'm actually going to do an R&D credit because of the fact that now we have this amortization rule. Because I'm also going to point out the amortization rule applies regardless of if we claim that credit or not. So you might as well claim the credit because it's going to help offset that tax liability that's being generated with this amortization. All right, with that being said, I think we have our second CPE polling question.
Yes, we do. It should be up on everyone's screen. Does your manufacturer currently take advantage of R&D tax credits? Give everyone a minute here to answer and we'll share those results. Waiting on those last couple responses to get in there. Okay, and sharing those results to everyone. It looks like we have a 50-50 split.
Wow, 50-50. Well, the nose should reach out. I'm kidding. All right. I also am just going to be cognizant of time. Anyone that's done presentations with me before through the BNMA, you may be familiar that I am a talker, so I could sit here and talk for hours. I'm trying my best not to. So with that being said, we will move on to audit considerations. So something I just want to point out, anytime that you're claiming a federal tax credit, that is going to be scrutinized by the IRS. Unfortunately, there are a lot of, bad players out there that are maybe claiming credits where they're not eligible for them. A lot of the common issues that we see in these court cases, in case you're not, reading this light bedtime material before bed, business component, which is, what my permitted purpose essentially is, my new product, my improved product, my process. They're focusing on the base period, which is a nuanced calculation in terms of how we determine the actual credit amount. That 4-part test, like I mentioned, a lot of these court cases are looking at, do these activities meet the 4-part test? And also, can you prove it? Substantiation, documentation, and then also, looking at those expenses as well. So the IRS does target the use of estimates when we're looking at QREs. So we always recommend that we have contemporaneous documentation. Contemporaneous documentation is key in claiming an R&D tax credit. And that's also where we can come in to help to make sure that, we do have the documentation in place to claim a credit and that we have it ready to go in the event that that credit is audited. Something that I will point out is that, the IRS will rely on employee testimony. However, you're always running a risk when we're just relying on that employee testimony. The IRS has a certain time period where they can go back and audit you. So you're always running the risk of that employee not being there anymore. If anyone else is like me, you kind of can't even remember what you did last week, let alone what I did 2 years ago. So, how I like to lay this out to clients is we want our hard physical documentation to pave the path. And that employee testimony can just fill in any cracks. So that's kind of the motto that I like to go by with this. With that being said, just some documentation best practices. We do have a handout. Please feel free to reach out to me and I can send you a copy of this. This is just kind of a screenshot of it. But we do have a handout with some general best practices when it comes to R&D documentation. One size does not fit all. Every manufacturer is different. Every, company operates differently. And that's kind of where we can come in and kind of help you figure out what works best for your company. But generally speaking, keeping copies of project proposals, test results, and reports. If you have an R&D team that's meeting regularly, making sure that those meeting notes are documented with who's attending and when you were meeting and those items, key items that were discussed. Emails back and forth between your engineers, if they're working through something, that can be substantial or contemporaneous documentation. Status reports, time sheets is great. If we have some form of employee time tracking, that's always helpful to, help justify what employees are working on and how much time they're working on that. Patents are always great proof of R&D as well. And then this handout kind of goes through, the different types of expenses and how we can document those. So wages, as I mentioned, ideally, if we have timesheets or some form of documentation that employees are keeping, generally speaking, I usually recommend that employees that are heavily involved in R&D keep a general weekly log in terms of what they're doing each week and who's helping them with those projects, because that can kind of help capture a lot of those activities. Supplies and computer leasing, making sure that we have separate general ledger accounts can be helpful. To make sure that, maybe our R&D expenses and R&D supplies are going to one general ledger account, cost of goods sold, and other non-R&D supplies are going to a different account. And then also contract research, making sure that we're keeping copies of those contracts, because that's something that we'll need to take a look at to make sure that the contract research does meet all of the requirements for us to include it in an R&D tax credit. And I know that can seem, the documentation piece, I think, is probably what's usually most overwhelming for clients. And that, like I said, that's really where we can come in and we can help you kind of set up a process that works for you. And that's helping us capture the necessary information to claim a credit and then also support it if in the event that it is audited. So we focused the first half of this on federal R&D tax credits. I do want to point out that many states in the US also offer some form of an R&D tax credit or other benefit. Generally speaking, these credits are going to be based on where that work is performed. So let's say you're like a New York State-based manufacturer, you may be conducting, 99% of your activities in the US, or in New York State, but maybe you've got like a couple of employees down in like Florida or something, That's where we're going to look at the cost benefit and what Florida's R&D requirements are to determine if it actually does make sense to pursue a state credit as well. But something to make sure that you have on your radar. I will point out that New York State does not have a state level R&D tax credit unless you are a part of the Excelsior Jobs program, which is a separate New York State credit program. However, we tabled the discussion on certain fixed assets that you're purchasing that are being used in the R&D process. So New York State does have an investment tax credit on certain eligible fixed assets that are used both in the R&D process, but also in the manufacturing process. So maybe you have something that's not used in the R&D process, but you are using a piece of machinery in the manufacturing process, there is a New York State credit for that. So something just to be aware of and make sure that we're looking at. Just to give you a high level overview of what the R&D study process looks like. And maybe right now you're on this call and you're thinking, we've never looked at this before. Does it make sense for us to look at this? This kind of is geared towards you. So the first step is an initial call with the Lumsden team here to determine if it makes sense to move forward. A lot of the times we're able to get a good idea of if we should even move to a high level cost benefit analysis just on an initial phone call, just by having those initial conversations. You know, we can give you a general idea of, yeah, it sounds like we maybe have some potential activities that qualify, or maybe, you know, we do, but there's not enough expenses, it sounds like, for it to justify a study. So like I said, first step is a call. From there, usually what we'll do is we can do what's called a high-level cost benefit analysis. So we'll ask for some preliminary information from you to give us a better idea of what those potential activities look like and the volume of those activities and potential eligible expenses. We can give you a very high level back of the napkin estimate of what that potential credit looks like. And from there, you know, that way you can make the proper business decision on if you want to proceed with an R&D tax credit study or if you'd rather pass. That whole phase one, as we call it, is completely free. We do not charge you for it. You know, we're not going to charge you for something that we don't know if it's even going to benefit you. So, like I said, if you're sitting on this call wondering if this might be, you know, pertinent to you, please reach out because we can kind of start those conversations. From there, we'll go, so let's say we determine that an R&D study is beneficial, we kind of move on to what's called phase two. So we will send you a full request list, we'll get all of the information we need, we'll perform interviews with your R&D team, we'll get a better idea of what those qualified activities look like, gather that documentation and calculate those credits. And then phase three is documentation, and we issue you guys a report. And with that being said, I think we hit polling question number 3.
Yes, we did, and it's launched there for everyone to answer. Does your company have qualified research expenses? Okay, just wait on those last couple of people to answer, and we'll share those results. Okay, and we have about a 2/3 split here on this one.
All right. So one of the last things that I just want to mention before we get into our key takeaways here is that there have been some recent changes to the Form 6765, which is what you claim your federal R&D tax credit on. With that being said, historically, the Form 6765, which is a form that gets attached to your tax return and claims the R&D tax credit, has been a pretty simple and straightforward form. So we talked about the R&D study process and how we, you know, go through, we document everything, we issue you a report. None of that really goes on your tax return. That's that's essentially our documentation and justification for claiming this credit. And that's our first line of defense if the credit is selected for audit or review. However, there have been changes to the 6765 that essentially increases the documentation burden on taxpayers. This applies regardless of industry. It doesn't matter if you're claiming this as a manufacturer, if you're claiming this as, you know, maybe a tech company or a startup company. It does apply to all taxpayers that are claiming the 6765. The goal of obtaining this information, you know, is obviously to prevent those false or inflated claims. So, you know, when you make something a little bit more difficult to claim, it tends to weed out some of, you know, those bad eggs. The changes are geared towards, you know, kind of providing the IRS with additional information that would be required upon an audit or a review. So it is giving them more information on like business components and tying those qualified expenses that we're taking into account for the credit to that business component or qualified project. So whenever I say business component, I would think what my R&D project is. So with that being said, a few years ago, there were changes to refund claims on amended returns. And what we're seeing with the new 6765, it tends to mimic what some of those changes were with refund claims. But before I get into the 6765, just real quick, those refund claims require additional information. So let's say I didn't claim an R&D tax credit on my originally filed tax return and I wanted to amend my return and it's going to result in a refund for me. Additional information regarding business components in my research activities must be submitted with that amended return in order for it to be processed. There's a lot more information that's being processed there. With that being said, generally here at Lumsden, we recommend, if possible, we do try to claim these credits on on original returns so that we don't have to worry about collecting and providing all of this additional information. So that's if we're just claiming a refund on an amended return. Now, for all R&D credit claims, starting with the 2024 tax year, the 6765 has been significantly increased in terms of the level of information that's required. So there are 3 entirely new sections that have been added to this form. And like I said, the information that they're requesting on these original R&D credit claims is similar to what they started requesting on amended refund claims a few years ago. So just to give you some perspective, the 6765 previously was only 2 pages, and it has now more than doubled, and it is 5 pages long now. It does require a lot of information regarding business component, which is basically your R&D projects that we're qualifying. And there also, because this is new, there are still some uncertainties surrounding certain definitions. I also know that there's some uncertainties regarding what the IRS is collecting this information for as well. So the biggest change to the 6765 is what's called the Section G. Luckily for 2024, Section G is optional for all taxpayers. However, after 2024, it is mandatory unless an exception applies. Basically, what this Section G is doing is it's requiring you to list out every single R&D project. And then for each individual R&D project, it wants to know the exact amount of wages we're qualifying for that project, the exact amount of supplies we're qualifying for that project, the exact amount of contract research that we're, qualifying for that project, and the exact amount of computer leasing if that's applicable as well. I will say, the IRS says that you have to report at least 80% of your total qualified research expenses on this form. They do state that if you have more than 50 business components, then you are limited to just 50 business components. But still, that's a lot of information that's required. And previously, we weren't necessarily required to break this out by project. We just had total supplies, total eligible wages, and total eligible contract research. So now it's definitely adding some additional difficulty in terms of making sure we're breaking this out properly. There are some exemptions that do apply for companies for tax years after 2024. So if you have qualified research expenses, that are less than 1.5 million, and you have gross receipts that are less than 50 million, then you do not have to complete Section G. In addition, if you meet the qualified startup company definition and you're eligible to claim and are claiming that payroll credit, then you also are exempted from this Section G. So obviously, if we're eligible for an exemption, definitely something that we want to try to claim just to, provide some relief on that additional burden. Something that I do want to point out, if you are already a client here at Lumsden and you are already claiming the R&D tax credit with us, this is something that we've been aware of for quite a few years, and we actually have been kind of altering our internal processes to make sure that we are already getting this information for you, and that we're collecting the information that we need internally to be able to complete this. So if you are here already claiming an R&D tax credit with us, this is something that we are already doing for you. And hopefully, if you've already done your R&D study this year, you've noticed a seamless process. And hopefully, if you haven't already, you will notice that it's a seamless process with these changes, because like I said, we've been proactive in terms of getting ready for this change. Just real quick here too, this is just to provide some further clarification regarding the 6765. This is the new form. So as you can see, quite a bit of information requested on there. Those are the first 2 pages, and then 2 pages here as well. And with that being said, I think that brings us to CPE polling question number 4.
It does, and this is just, are you a member of the BNMA? So we will have everyone answer that. And if you are not a member of the BNMA, we encourage you to join. It's a great group and you get lots of information and you get to, pick the brains of people like Kristin. So we will have everyone answer that and we will be done with our polling questions for today.
Yeah, and I will also echo that, Christine. I mean, the BNMA definitely has a ton of great resources. This is one lunch and learn of many lunch and learns that they put on geared towards manufacturers. So if you're not a member, please feel free to reach out to me and I can put you in contact with Peter Ahrens over at the BNMA, or if you have Peter's contact information already, please feel free to reach out to him.
I'm going to close off this poll and we will finish up for today.
Awesome. All right, so key takeaways. I know I threw a lot of information at you. I could keep going. I'm very proud of myself on the timing that I've done so far. Like I said, I am a chit chatter, so I will sit here and talk your ear off. But key takeaways, what actually matters from this presentation? What I would say I'd want you to walk away, there is a federal R&D tax credit that is available to companies that are conducting qualified R&D activities. It can provide a direct benefit on an income tax return in the event that you have a tax liability. If you don't have a tax liability, but we're still claiming it as an income tax credit, that credit can be carried back 1 year or carried forward for 20. If you meet the definition of a qualified startup company, you may be eligible to claim this as a refundable credit on your quarterly payroll tax returns. It'll help offset the employer portion of FICA taxes. And really, especially in the manufacturing industry, you're most likely conducting these R&D activities on a daily basis. You're constantly improving your manufacturing process. You're most likely coming up with new designs of new products, or improving existing products and things like that. So a lot of the times these are activities that you're conducting on a day-to-day basis, and it's just a matter of making sure we're tracking it so that we can then get a tax credit and reduce those tax liabilities for these activities. And just some final last considerations before we end the day. We mentioned that this credit is for research conducted within the US. There are other countries that have R&D tax credits. Obviously, we are only advising on the US side of things, but this is where we would, let's say you have a subsidiary in another country. We would want to be working with your accountants in those other countries to make sure, we're claiming what's most beneficial. Our goal is always to make sure that we're doing what makes sense from a worldwide tax standpoint. As we know, in today's day and age, the world feels smaller and smaller and smaller because we are easily able to access other markets in different countries. We've got, you're setting up subsidiaries in other countries so that you're tapping into some of those markets or those talent networks. So with that being said, we may not want to focus on what's just the benefit in the US. We may also want to make sure that we're considering other countries as well in that. And like I said, that's where we want to make sure that we're working with your accountants in these other countries. We talked about Section 174. That's that R&D capitalization. So, there is an impact on that. There are, once again, just to reiterate, that R&D capitalization applies regardless of if you're claiming an R&D tax credit, but something to keep in mind too as we're looking at these credits, because it can help offset that tax liability that could be created from that R&D capitalization. And one last thing that I like to point out too is, even if, let's say you had a bunch of net operating losses, so you were previously operating with a ton of losses, and then this is your first year operating with taxable income. We may still want to look at claiming an R&D tax credit, because even though you have net operating losses, those losses could be limited. Depending on the tax year that net operating loss was generated in, it could be subject to an 80% limitation, which means that NOL can only offset 80% of taxable income in that year, which creates a little gap. So you could still have tax due in the year despite having that operating loss. So that R&D credit can help offset that gap or bridge that gap. And also there's something called Section 382 limitations that come into play, especially with, my startup companies. I see this a lot, or existing manufacturers that maybe you sold. So if there's a change in ownership of 50 percentage points or more, you can fall victim to these Section 382 limitations, which could also limit prior NOLs or prior R&D credits. So there could be, incentive there to look at claiming an R&D credit despite having these losses. But with that being said, we've reached the end of this presentation for the day. If anyone has any questions, I don't know if there's anything in the chat. As I mentioned, I'm actually just going to go to the next slide here because that is my contact information. So please do not hesitate to reach out to me if you have any questions. If you want to hop on a quick call and chat, like I said, I could talk about this for hours. So I'd be more than happy to take anyone's questions or phone calls.
I am not seeing any questions in the chat here, Kristin. So as we see, your contact information is there on the screen. And when we add the recording and slides to our website, we will also link Kristin's information again. So if you don't forget, or if you don't remember to write it down or you lose it or something, it's also on our website. Thank you, Kristin, for such a great presentation today. And thank you everyone for attending. As a reminder, please complete the survey that is going to pop up on your screen when we close out of here. Thank you again, Kristin.
Yeah, thank you, everyone.